Hi, everybody, and good morning from Rye, New York, actually. And for some reason, you don't see me, do you? Can you hear me well?
We can hear you.
Yeah,
we
we
can't
can hear
see
you.
you, Danny.
Yeah, what's that all about?
Maybe you share the screen. Yeah,
That's
yeah.
it.
Now we can.
That's it. So, so good morning. I have Srikanth with me and Craig from not so far from me, at least, right? Connecticut.
Yes,
We're in
sir.
Darien, Connecticut.
Well, I heard it was snowing last night, even though I didn't see it on my end. I'd like, this is basically an interesting session. It's the last session of the year after we've done, I'm not even sure how many we've done, probably over 100 this year.
Wow.
Probably. So, it's the last one for this year. And after a hectic month where we've done our London conference, that was great a couple of weeks ago. And I just came back last week from Miami, where we've done our Miami conference that was also pretty packed. So a couple of words about you guys, and then of course we'll hear more. So Palla Capital is a platform that really drives transformative growth with a hybrid venture capital, private equity, and entrepreneurial investment strategy, developing the world's most dynamic personal wealth creation platform by offering products, services, and investments. And of course, we will talk more about this so people will understand more on that side of things. The firm acquires, invests, and builds a cohesive ecosystem of tech and fintech systems, products, and services that enhance the platform and help the customers and investors in their quest for personal wealth and security. So just a couple of words about you, and really it's in a nutshell. So I would love it if you could maybe speak a little bit more about yourselves. So first of all, President and CEO, we are missing right now one speaker, which is Wallace, which might join us later on. But I will start with Mr. Palla, with 20 plus years in technology management at major corporations with global reach, ex-Merrill Lynch, UBS, Bridgewater Associates, HP, KPMG, and Pitney Bowes. Technology experience includes managing technology assets, products, and digital transformation programs at a global scale. Craig, who's the CFO of the firm, over 25 years of experience on Wall Street as a CFO and COO, focused on accounting, finance, compliance for private fund managers and family offices, deals, and M&A experience of over $100 million since 2008. His expertise are in startups, private placements in public and private equity, venture capital, and turnarounds. So I hope I got that right. Good morning.
Good morning.
Good morning. Thank you, Danny.
Thank you.
Yeah, so maybe just a couple of general questions before we dive in. How did this came to be? This is a relatively new project, but you guys have a lot of experience in what you do. If you could tell us, a little bit more about your background and how Palla came to be.
Sure.
We'll take it from there.
Awesome. So, first of all, thank you so much, Danny. I think this is a great platform. It's good we connected and we are here in front of the family offices and the investors group that you have. It's a great platform. We really appreciate you taking the time and working with us to get together this meeting in place. And I thank everybody who's on this webinar for taking the time out to listen to us. Really appreciate it, guys. So I've been in technology all my life, and was working on trading software for financial companies, and did a lot of management consulting with KPMG. And here and there, I've been involved in mergers and acquisitions space. When UBS acquired ABN AMRO business, we consolidated all their systems. And then at KPMG, we built and acquired a few companies as KPMG US portfolio companies. And I was actively involved in that. So that's when I started, looking at acquisitions, companies, tech assets, what we should look for. And then after I started my own company, a friend of mine actually was looking to buy a few tech companies, and he said, "Hey, you have some experience. Can you please help me vet these companies?" And I did that for them, just as a friendly gesture. Was helping him navigate through that process. And what I realized is there is in all that due diligence and helping people, I saw that there's a huge value, and then I think that's what the webinar title talks about, the arbitrage alpha, what I'm calling it as, right? There's a lot of value when you pool these companies, these profitable companies that are on the cusp of scalability, or on the cusp of getting from a $5 million to a $10 million in revenue, or $10 million to a $15 million in revenue, and bring them together into a cohesive platform and take them to public markets, and take them to capital markets. I think there's a huge value there. And a lot of people are not looking at this because everybody, if you look at a private equity or if you look at a venture capital type of companies, they are either coming in very early or they're coming in a little bit late. Because, for example, a decent sized private equity firm would not look at a deal less than $3 million in Ebitda. That's their bottom line. Even if you go to them with a $2.5 million Ebitda, they will say, okay, you know what? The guy who's looking at the deal flow will say, no, this doesn't fit our portfolio. So I think I saw a lot of value there. And then, I was, it's funny, I was opening a bank account at Wells Fargo for Palla Capital, and the banker there says, "Hey, what do you guys do at Palla Capital?" And I explain him, we are in the tech fintech space. We look at, we invest, we build, and we also acquire companies in this space. And then he said, I have a guy who is a good fit for you, and that's Craig right here. So I said, yeah, would love to meet him. And then I met him, I explained him my strategy, and he's been doing this since he graduated from school. So I came from a tech background, but he dabbled into Wall Street, and he did turnarounds, acquisitions, hedge funds, and all this stuff. So he heard my strategy, and he said, you know what, I like what you're doing. I want to be part of this, and that's it. We kind of formed the group, and I network a lot, and somebody referred me Wallace Glossy, who is a legal advisor. For some reason, he's not here today, but any moment he might join us. He is an advisor to a lot of companies. He's on boards of a lot of companies. He has taken 4 companies public on the London Stock Exchange. So he's really active in this space. And then we sat down, and we both, me and Craig, explained him what our strategy is, and if he could help us on the legal side, being an advisor as well as a counsel. And he came on board, and he said, I get what you guys are doing. There's a huge value there. And the team was formed, and everything else in the last 4 months has been really, really, I would say, I worked for so many companies for so many years, but I think it's a different feeling when you're going after something that you strongly believe in, and you're creating value, not only for yourself, but for the investors that are coming on board with you. So it has been really fun working with Craig, and we're just getting started, guys.
So when was your last job with one of the big guys? I mean, throughout your career, you've been working for major corporates, and now it's completely new game for you.
Yes. Because I think, at the end of the day, once you cross some years of experience in the corporate side, once you get to a point where, you have learned in tech, whatever you need to, tech is always evolving, but once you get to the management position, it's more about strategy. It's more about, getting things done. And I did that for, all these companies. And I said, okay, I'm creating all this value, but, how about I create this value for investors and for myself and for the team, and create something which is larger than working for a company. Because what we are creating is we are not looking at, pulling some companies going public and that's it, end of the story. That's not what we are going after. We're going after creating a multi-billion-dollar market cap company that is going to thrive, succeed, and continue on. And it's a legacy that you are creating, basically. So I think there's much more value, there's much more excitement in doing something like that than doing a corporate job. I felt after working for like 25 years. So that's why I took the whole paradigm shift, I would say, as you said. Yep.
Mm-hmm. I see. For some reason, they're telling me here that they don't see you, even though I do see you. They basically saw Craig throughout the whole thing. Can you see everybody now? I will try to work on it.
All good now.
All good now. Good.
Yeah.
Good. I don't know. This is I've been doing loads of those, and that's the first time that the view is like that. Anyway, it's for this last one for the year. It's a special occasion, so special errors.
Holiday edition.
Holiday edition.
We save the best mistakes for last. Craig, a couple of words about your crazy history as well. Very impressive.
Sure. Well, thank you everyone for joining us this morning. I know how valuable everybody's time is, especially this time of year. I promise we will make it worth your while. As Srikanth said, Palla's mission, I view as a more simple one than he elaborated on. We want to connect retail investors and smaller institutional investors with a pipeline to invest in private companies that have an opportunity for a 20x, 30x, 100x exit. And we'll talk a little bit more about that later on in this meeting. My background is as a CFO and a COO for hedge funds and with private equity and venture capital firms. I've been involved with a bunch of early stage and turnaround companies, so I'm accustomed to partnering with these management teams and rolling up my sleeves and getting into the weeds, helping to scale these companies into successful exits. In the fintech space, I was part of a team that created a more dynamic, developed version of a Peloton, which was sold to Beachbody earlier this year. I've helped launch a bunch of peer-to-peer expert networks that take advantage of the dislocation in pricing in the current marketplace. In tech plays, we exited a robotics company that was sold to one of the world's largest retailers. I've been in the SaaS space. We turned around several software concepts that were serving the dental community. We've had some success in the education space. I've been involved with direct-to-consumer plays in cannabis and CBD, in manufacturing, in air guns, oddly enough. I've worked with a chain of vegan eateries whose focus is to become the new healthy version of Starbucks. We're grabbing market share throughout Southern New England. And if you want to learn more about any of those details of those deals, please reach out directly after this webinar, and I'd be happy to walk you through them. I'm really excited to have partnered with Wally and Srikanth and Sai, who's our tech advisor. I think we have the collaborative mindset to work with along with these management teams, because we're really partnering with these management teams. We're not buying distressed companies. We're buying Ebitda positive companies that have a chance to scale for whatever reason they haven't, and we know that we're the right guys to help them scale.
Let's talk a little bit about that, about what you guys do. So a little bit more about your strategy, acquiring, investing, building products and services. Tell us a little bit about that.
Sure. So given the last 2 years, so I've been networking a lot in the M&A space, and the last 2 years we have built a good deal flow with respect to connections and with respect to principals who are looking to exit, and we have our own way of reaching out to them and trying to figure out who's ready to exit. So the goal is to find out what companies actually are already doing well and how we could help them, bringing them into our portfolio. So there are three main themes that we follow. We follow tech, fintech, and e-commerce, right? And all these, if you look at, they kind of surround with technology to be able to run the business and scale the business, right? So, and then that's our expertise. Me coming from a tech background, Craig coming from some PE hedge funds investing into tech, fintech companies, And also Sai, who's our technical advisor, he heads up technology at Callaway Golf. He has done a lot of deals for Callaway in the tech space. So what we do is we look at companies that fall into these themes, right? Which is tech services, cloud, digital transformation, those kind of areas, services, tech services. And then also Google, AWS, or services that are on the cloud side. These are the companies that we look at. And then on the fintech side, we're talking about payments, crypto, transformation with respect to how money is going from point A to point B. Those kind of solutions we look at in the fintech space. And I'm a big crypto investor myself, been following crypto for more than like 5-6 years now. And we believe that there's a lot of value having crypto or digital, tokenization kind of products and services within Palla Capital. So we'll talk about one of the projects that we are actually working on, which is really, really exciting. But that's what the fintech bucket would focus on. And then, the e-commerce tech and e-commerce, as you guys can see in the last few years, especially COVID, has been a good test for a lot of businesses, right? It's one of those tests where businesses either sustained or they failed. And it was a good litmus test to see which ones actually sustained. And the ones that sustained are the ones that went for digital transformation, digitization within their business workflow, right? So e-commerce is a big chunk of portfolio that is growing, 2 or 3 digit every year over year. So, and there's a lot of technology supporting e-commerce businesses. So we want to focus on e-commerce businesses itself and also the technology surrounding e-commerce, right? So these are the themes that we follow. And we have, for each and every theme, we have the right partners in place, right deal flow mechanisms in place that we actually source and not competing with, other firms or not aggressively competing with other firms. So there is a internal team that, kind of sources them through social media, and we kind of put them in front of what Palla Capital is, what we do, and we kind of source deals like that. And to be honest with you, we are getting, after we have started working with people and people started to know our connections that this is what we are doing now. We have like 6 or 7 deals in the pipeline that we told them to hold off because we have active deals that we are actually negotiating as we speak. We want to close them first, and then we want to look at these deals. So there's a lot of value with respect to why they want to partner with us. And it's a win-win for everyone because they get the exposure of public markets. For example, just to give you somebody who's doing a $2 million in EBITDA, if he is looking to sell his company today in private markets, right? Probably he would get maybe somewhere between 4 to 5x, depending upon what kind of tech is it, and how strong the EBITDA cash flows are. Partnering with with Palla Capital, right? That pretty much doubles or triples for him as a net asset value that he would gain after we acquiring the company, right? So that's the value we are talking about. It's a win-win for everyone involved. It's a win-win for the portfolio company as a principal for him, and it's a win-win for Palla Capital and their investors. So everybody walks home happy after getting these things in place and doing what we are intending to do. So yeah, so I hope that answers.
Thank you. Now, how are you planning to achieve your goal? Let's talk about your network and everything you've established. So that's really my question for you. And maybe you can share some of the projects or the spaces you're looking at in more details. So maybe we'll start with that.
Yeah. So I'll just give you a quick, I think we already touched the deal sourcing capabilities. So I'll let Craig talk about what he's bringing to the table, which is a huge network of deals that he sees every day So, I'll let him, cover that. And after that, we'll talk about the active projects that we are working on.
Sure.
And I think the common ground of these deals are that all of those you think would scale up tremendously within a pretty short time of 12 to 24 months or so. Is that correct?
So again, right? So as we said, our strategy is threefold. All right. So we acquire. Those are the positive cash flow positive companies already from day one. They are actually making money. So we just have to put in more capital, or we have to bring some new business with our connections so that it can scale up to the next level. So they are from day one cash flow positive. So those are the acquisitions we focus on.
Then how much would you invest in companies like that?
Usually we buy 80% of the company, given the tax laws, SEC laws, and all these other things that we have to worry about, because the goal is to take the company public. The guidance from counseling or with talking to the attorneys is ideally you want to get 80% in that company. I mean, you could get away with 51%, but there's a lot of documentation that needs to be redocumented to be able to make sure everything is in line. Ideally, we acquire 80% in the company, whether it is a initial investment, whether it's a scaled company, whatever it is. And what we do is we look at, is it a VC type investment, or is it a PE type investment? If it's a PE type investment, then we pretty much go in, negotiate, and we buy part cash, part stock kind of a deal, and we say, okay, we're gonna acquire 80% of your company, we're gonna help you grow, and still the principals will continue in that company doing what they were doing, right? That would be a PE type of a deal. A VC type of a deal, which we have one call on Sunday. It's a great tech company. The guy is an ex-trader, high volatility trader. He came up with a platform that is mimicking what Amazon is doing, which is really, really cool. So that would be an early VC type of an investment. Still, we would get a majority stake in the company, and we would give them the capital so that they can scale and start doing the branding, marketing, whatever they need to do to be able to scale the company. And then we also build, right? We acquire, we invest, and we build. So what does build mean? So let's say, we acquired one or two fintech companies, we acquired one tech company, and we acquired some, e-commerce tech company. And we are seeing that there's a gap in between somewhere where we could add value, or we could create a product, or we could create a service, or we could come up with some, API definitions and build some APIs that can talk to each other, right? And that we can commercialize on, or help increase the business profitability at the end of the day to kind of automate the middle office or the back office. Coming from a tech background, this is what I did, building software for enterprise grade software. So that's why we said we should not go away with our sweet spot, which is, building software and building products and services. And if we could help them with our portfolio companies, we would do that. Or if we could build something from the scratch, which could be a huge success, we would also invest into that. So that's why the theme is, this is a two-level theme if you look at it, right? We acquire, we invest, and we build. Underneath that, okay, where do you do these things is tech, fintech, and e-commerce.
Before I let Craig jump in and talk about this, you just mentioned the company that mimics Amazon. In which respect? I mean, what do they do?
Yeah, so basically, there is no platform out there that is robust enough, which consolidates all the vendors in the financial services, mortgage tech, fintech, insurance tech. All these are different vertical silos right now in the marketplace. And if you want to go and get a vendor to do something for you, you have to vet these independently, or you have to hire a consulting company to do that. Now, this platform, what it does is it creates a broader platform where all the vendors can come in and be part of this platform. And like you go to Amazon, you say, I want to buy shoes today. You just go there, open up the website, and then in the search, you say, if you're buying shoes for your kids, you'll say, for my kids, like, the category kids, and you'll say, shoes. And then it comes up, it gives you all different options that you could go with. something similar to that. He is coming up with this product. Actually, they are live. I think on Friday they're going live with the product, and it's a great product from what I heard so far. But we're going to get a demo on Friday, and I think he's a great guy. I think I already spent like a few hours with him on the phone, and I understand what he's trying to achieve. I think there's a huge value there, and there's nothing like that in the market today, right? And we got our hands on the deal, which tells us, or which kind of gives me the comfort level that, and by the way, we did not even spend $1 to get our hands on the deal. It was actually knocking on our door because they see what we are doing, and then I think they got some advice from someone saying that, hey, you should talk to this company, Palla Capital. They are in this space, and they can help you grow. So yeah.
Great, thank you. So Craig, so I'll let you take the lead and answer more in depth about how you're planning to achieve your goals and talk about your projects.
Sure. Well, just having been on Wall Street for 25 years, you can imagine that my network of, to be able to source deals is very expansive. And so when Srikanth and I first kicked off Palla Capital, I spent the first month or so working the phones, reaching out to the investment bankers I knew and everybody who has deal flow to let them know what we were doing and what we were looking for. And that was probably the best first step I could have made, because nobody wastes our time right now. It's funny, we're both chasing deals, and our time is better spent not bringing, Srikanth in to look at a deal, or him to bring me in to look at a deal, until we know that it's something that really fits the bill that we're looking for. That said, these deals are just coming to us. I think COVID really helped. It's easier to connect with these companies. A lot of people left their regular job and they're starting these companies. So there's really a plethora of different options available to us. And in our pipeline, I guess I could talk about some of our deals right now. We have, he mentioned the crypto project that he'll talk to a little bit. One that we're really, really excited about is a smart ATM company that we have an LOI out on. And this is, we call it the Unbanked project. Just from our channel checks with big banks like Wells Fargo and JP Morgan, we know that the unbanked, as they're being called, are a big initiative for the larger banks. If you think about this, it's a smartphone that accepts and dispenses cash. When you consider that the current ATM prototype hasn't evolved since its introduction in the 1980s, and that there are an estimated 80 million people in North America alone who, for whatever reason, are either considered unbanked, underbanked, or unhappily banked. We call that the cash economy. There is a wide need for a digital solution to meet their banking needs, to get them banking. Think about this. There are more cash checking stores in America than there are McDonald's. So rather than have to wait in line at a check cashing store, we want to offer them a solution that they'll be able to take advantage of and make deposits, withdrawals, pay bills, send money internationally, buy gift cards, get microloans. It's all bundled up at a fraction of what they're paying now to all different vendors. And this all happens from their phone. The sky's the limit here. There are multiple revenue streams that we see. You could, whether it's leasing the machines, transaction fees, advertising. Srikanth and I think the big play here is really the data mining and the analysis component. You think of what the data that we would collect would be worth, both to us and on the secondary market. I can't disclose a lot of secret sauce here. If you want to contact us after this webinar, I can get you an NDA and we can set up a call with the team and to discuss it a little more. But I'll tell you, their management team is top notch. They do have some test machines out there. They have a handful of sites. We work very collaboratively with this team. We've been involved in a couple deals. We know them for a long time, and we think we can develop and fine tune the offering and turn it into what we see as a $1 billion with a B company. like I said, the management company and Srikanth and I, we trust each other, and we have that collaborative working relationship to be able to get that done very quickly.
Yeah, yeah. And then there's so I want to talk about the two active projects that we are actually, I'm getting some emails with respect to, we were supposed to sign the LOIs yesterday, late night. It kind of got delayed because one of the sellers had to go through some surgery, so it kind of got delayed. I was hoping to come to the webinar today with the LOI signed, but I'm getting the emails here that it's going in the right direction. So let me first talk about the two projects that are really active that we could close as soon as we could finish the due diligence in the next 45 days. I would say maybe mid-January or something, right? The first one is the AR/VR patents, so augmented reality and virtual reality, right? There are 12 patents by a researcher who was very forward-looking, and he filed these patents 20 years ago, believe it or not. And these are augmented reality, virtual reality patents, right? And he filed them. He worked for military. He worked for like a lot of big private companies, and he did a lot of research. Guy graduated from UC Berkeley. Very nice guy to work with. And we looked at these patents and we said, we said, okay, how can we, if we buy these patents, what could we do? And this was like before Facebook announced Metaverse, right? And then as soon as Facebook announced Metaverse, it was a no-brainer for us, right? Because if you look at it, 10, 15 years from now, this is going to be how the businesses are going to actually be developed, or how people are going to interact with each other real time in a virtual environment. That's what is going to happen in the next 15, 20 years, right? So being in the middle of that and looking at where the market is going, I was reading an article the other day. Grayscale, a company that's heavily invested in digital assets, and Cathie Wood, everybody knows who Cathie Wood is. They said this is going to be a $1 trillion opportunity. Metaverse is going to be a $1 trillion opportunity in the next couple of years, right? That's what we are going after. And there are two leading companies in the metaverse space, Sandbox and Decentraland. They invested $200 million into metaverse, right? Buying virtual land, right? And why are they doing that? Because at some point, could be 5, could be 10, or could be even less, people are going to start interacting and spending time more on virtual environments than physical earthly environments. That's what people believe. And we could see that with kids. With COVID, I mean, kids or anybody could not go outside. I don't play video games, but whoever played video games, they played more video games. And we could see what Roblox did, right? With their IPO, right? How many users did they get? And this is where the world is going to towards, and then how people are going to spend their time online, right? So what are we going to do with these patents? I think what we are going to do is, first, we are going to acquire these patents and build some products or into gaming, some software that is going to help users use the metaverse in a much more easier fashion or much more reliable fashion, and helping people communicate in real time being in a metaverse. So the core patent is about digital communication in real time in a virtual environment. That is one of the patents, and we are going to do that. Now think about it, right? We can build some products, we can build some games that actually use these patents. That's one revenue stream. The other revenue stream would be a lot of companies that are developing AR/VR apps or products or services. They don't know that this patent actually exists, right? Because nobody thought that 20 years ago somebody would think about a virtual environment and would create a patent for that. And that would be a passive revenue stream, anybody who's using our patents, right, in the future, right? And then the third revenue stream could be, we can actually go after creating our own virtual environment where people can use our APIs that we are going to build to be able to, let's say somebody wants to create a gaming app in a virtual environment. And we have the APIs because we have the patent, and we can create that software where they could use our API to be able to communicate in a virtual environment. And we create that. They don't have to build that. It's more like hook up, click and play, right? So it's going to be really, really exciting. Just coming from a tech background, acquiring these patents, because we think there's a huge value there that we could build around it, right? And there are companies, especially big tech companies, Microsoft, Apple, Google, somebody like a educator at the USPTO office. He was, I think he wrote some article or something where he was lining up these patents, like, what is the value of these patents? And it was right in the middle of Microsoft, what Microsoft was doing, what Google was doing, and what Google is doing, and what Apple is doing. This patent fit right in the middle, right? Because those are the apps that Microsoft is building. These are the apps, that Apple is building, and then our patent is right in the middle of that. So, and this came from, the USPTO office, not from any law firm or anybody. So when I saw that, I was like, okay, you know what? I think we should definitely get this into our portfolio. So we are working on that. I think today we will get the LOI signed, and we will move forward in getting those patents into Palla Capital. So that's one acquisition we are working on, and we are excited about. Any questions, Denny? Should I pause for questions, or are we doing it at the end?
I see. We can go to the questions later on. I see some folks are asking in the wrong place, by the way, not in the Q&A, but in another place. They have some questions. But maybe when you look at blockchain, so I feel always that there's this group that don't believe in this space, and there's this group that does. And of course, we put apart cryptocurrency, which is one thing that currently is traded because people are making money, but nobody's sure what use there is to actually the cryptocurrency when they're not really implemented anywhere.
Yeah,
as people thought. And then there's the blockchain technology, which again we see, that some people believe that that's the future of many things, and others are more skeptical because they think that it's not fast enough, it doesn't work. I don't know. So I'm assuming, you believe in that area, at least from the blockchain technology side of things.
Yep. I do. So that's a very good segue into the next project I want to talk about, which is a smart ATM project, which actually Craig just talked about. So think of it like everybody knows what an ATM is. You go there, you put your card in, you get some cash out. That's what an ATM does. Now think about the time when Steve Jobs came and said, guys, this is called an iPhone, right? We were using flip phones at that time. And he came up with this iPhone concept where he said, now you can have apps on this iPhone. You could have all these different, companies doing business on this device, right? It was a revolutionary platform that he created on a device, right? So that's what we're going to do with the ATMs that are out there, with the smart ATM. There is nobody doing this in US and Canada, at least what we have seen so far. There's only this one company that has the IP and that has actually developed a product, not just a prototype. It's already in production. Big companies have signed 2 agreements with them and installed like 50 or 60 machines in US already. So think of a reverse ATM concept, right? You go to the ATM, you don't take money from it, but you deposit money into it, right? So I want to share my screen because I want to show you guys what are these services that we are going after here, so that you guys get the breadth and depth of this thing. So let me do this, share screen, share. Let me know, Danny, if you can see this.
Perfect.
All right. So Once we have our smart ATM in place, look at all the services. Yes, we can do what a regular dumb ATM would do today because it just does one thing. It's not smart. So that's why we are creating the smart ATM. We can send money using our smart ATM network. Prepaid cards can be used. Checks can be cashed. We can do investments. We can open up investments on that ATM machine. Currency can be exchanged. Digital currency can be, shared between the users on the platform. We can start collecting data on these not happily banked, unbanked users that are using the smart ATM network. And we could build a credit scoring system altogether because at the end of the day, the data is the king, right? So that's what we'll be collecting. We can do microfinancing. We can do data analysis and sell services to them. We can pay the bills, mortgage bills, utility bills, whatever you call. We can provide insurance services. People can shop on this, on this ATM network. We can do sports betting, right? And we can create APIs so that other businesses, any of these businesses can hook into our network and kind of use our platform. Now, all of this is working in a siloed mechanism given today in the current marketplace. Right? And what we're going to do is I'm going to stop sharing now. Where do I go? Okay, stop share. And if you guys can see what you're seeing now, my screen, we're going to put all those services into this. We're going to wrap around an app that will go onto your phone, which is connected to our smart ATM network. So you can walk into any smart ATM and use the services using your app. Now, just imagine our ideal customer is somewhere between 18 to 40 years old, and in US. And what they do is, let's say I'm a responsible, 22-year-old. I just got off work. I'm working as a bartender, for example. I got, $100 tip today, let's say, for example, right? I save some for myself, for my expenses, and I take money and I go to one of the smart ATMs that's there in that bar or wherever he's working, probably very close by. The guy goes to the ATM and he deposits cash into the ATM, right? Now he walks away with his phone and he can do anything with that money sitting on the cloud, what we call, it's an IP. The company that we're acquiring is called Cash to Cloud. This is what is cash to cloud, right? You just put your cash into cloud, and now you have the money in the cloud that is accessible for you anywhere you have your phone, and now you can do whatever you want. The other thing is, a lot of people who are doing proper jobs, they have a 401k lined up. A lot of people in US especially, they don't have a 401k set up for themselves. And somebody. And the reason could be, there's no, the companies are not looking to open up a 401k account for the cash economy people, right? People are living on cash, right? So this company had a discussion with ING, and ING was excited to partner with this company because now we can open Roth IRA accounts for all these customers that we are going to have on our platform. They could start saving for their retirement using this network, because now we're going to have a Roth IRA account created for them with the help of ING, and they can start putting in $20 or $30 or $40 or $100 or $200, whatever they want, into that ATM network, into their account, which goes into their Roth IRA. And they could deposit the money at the end of the month. They could say, okay, I want to send $200 to my Roth IRA and remaining would go into my payments. So basically, we are putting a bank sort of a service with less fees, more accessible, and it's going to be really exciting. And I was speaking to one of the bankers at Wells Fargo. Believe it or not, the big banks are looking at this in a very microscopic way, because they believe there is a lot of business there. And when this company spoke to ING was willing to pay this company $4,000 for every new account that they would bring to ING for the Roth IRA. Because why are they paying that? Because they believe that it's not only a business that is coming in, it's a huge business that is not tapped today, right? So that's the exciting part about the smart ATM concept. And the cash to cloud is definitely really exciting. And there's also cash to crypto that this company can do, because you can deposit cash. Let's say someone's is in US, he's working on this cash economy concept. Most of his paycheck comes in cash. He wants to send money to his mom in Mexico, let's say, right? What are the options? He can go to Western Union, he can go somewhere else and wire transfer the money or whatever it is, but that's going to cost time, that's going to cost money, and it is really, really expensive to do a wire transfer, like for what, $100 or $200, right? But if we create this platform, we could deposit, somebody could go to an ATM, deposit cash and say, I want to send this money to so-and-so person on the network, and we convert that cash into crypto and then crypto back to cash. And the person in Mexico can go to a smart ATM network close by and then show the QR code, scan the QR code and draw the cash. And all of this happens in seconds. The minute you deposit and say send money happens in seconds, right? So to your point about blockchain and you know the tech behind blockchain, I think that's where the value is, right? The speed at which transactions can happen and how secure those transactions are and how you know authentic those transactions are, right? That's where the blockchain is going to really help facilitate, you know, the payments, facilitate the business, facilitate moving money from point A to point B very quickly and very, very, very cheaply, right? So that's our second project, which is also in the pipeline, and I think you know that would be a good addition to what we are trying to do. That in itself is going to be at least $1 billion market cap company, you know, in itself, in probably, I would say maybe 2 to 4 years, because all they need is capital so that we can start developing this network and start installing the smart ATMs wherever the regular ATMs are. So we have a good plan in place. I think we need close to $15 million to acquire a controlling stake in this company, and we could do that as soon as possible, probably in Jan or maybe February, get the due diligence done and close that deal. So that's really going to be exciting. So that's about like blockchain, why I believe in blockchain and how it's going to help people do their business quickly, securely, safely, and also save money as they do that.
Now, we have a couple of questions from folks here, but I have 2 more questions for you, and we don't have much time, so I'll jump to the next question that I have. How are you funding Palla Capital?
So we have you know, put our own money into the company, close to $500,000, and then we are also doing a friends and family round of $2 million, which is going to be really, really exciting. And you know, it's 8x returns in 6 to 9 months for the initial investors. And then we're right now starting a Reg D round for like $20 to $25 million, which is going to be at $4 or $5 a share. And we're raising that money in the Reg D and going after these acquisitions.
And a couple of words about your exit strategy and timeline.
Okay, so very, very good question. So we look at this as a 18 to 36 months timeline. And the reason why I have such a gap is we have just last week, we have 2 more companies in the pipeline. And by the way, I'm going to quickly take 1 minute, if I have your permission, about the securitized token offering project that we are building ourselves. So we are going to do a securitized token offering, pretty much tokenizing an asset. So there are life insurance products. We have a strong IP that Wally has worked with in the past into a fund that has really developed, resulted in a tremendous value. So we have a strong IP in the back end, how to source, manage, and matriculate life insurance products, right? We are going to use that IP in the back end. Using that as the underlying asset, we are going to issue a securitized token offering that is backed by an asset which is non-correlated with the markets. It's a non-correlated asset, meaning that tomorrow the Dow can fall down, you know, the market can crash, but these assets will hold their value because of their value, right? And we're gonna, you know, put that under the token, give it wrap it around a securitized token, and we want to go public, and we want to raise like 100, $200 million in doing that. So that's under project that we are building on our own, which is going to be a token offering. So those are the projects. Now the question about, okay, what is the exit strategy? Now the exit strategy is either or. Why I say that? Because just last week, we have 2 more companies in our deal pipeline. One, a crypto and foreign exchange company that is doing $25 million in revenue. And then there is this other company that I talked about, like Amazonian type financial services company. These 2 companies came to us, and if we get a merger agreement in place with the exchange company, the crypto and foreign exchange company, which is already doing $25 million in revenue, and we get this Amazonian tech company, and we have the smart ATM company in our platform, we are going to be a very, very interesting target for a SPAC that is already listed on an exchange, right? So we, already there are like, few people talking about that. I'm working with a law firm that has recently done few SPAC combinations. So they were like, when I told them about our smart ATM project and our securitized token offering project, they said, Srikanth, maybe we should get this other crypto exchange company into your bucket so that, it could be a good fit for a SPAC combination. So if we can get these things aligned, what we need capital to grow these companies. And that's what a SPAC is looking for, right? So a SPAC with a $200 million SPAC, probably a pipe going on the side for 150 million would go into getting all these assets, the capital liquidity needs to be able to go and scale the companies. So that could be one option. We didn't start the company hoping that we would be a SPAC acquisition, but that could be one option, which is a highly possible option. And it saves time and energy because the SPAC is already public. We don't have to worry about filing and all those things. But if that doesn't happen, or if we don't want to go that route, we want to do IPO on our own, it would be either a Reg A plus offering, or it could be a direct, registration statement, filing the registration statement with the SEC and going IPO on our own. So that's why 18 months is more like a SPAC combination kind of thing, solution. 36 months is going on our own, probably, or maybe less than that. But I'm just giving you a better window.
And I see one question here. What's the typical check size for VC private equity type deal?
We did not put a minimum. We would love to get, one family office, big one, if they want to come in. But, if you ask me what is a small, I would say maybe $1 or $2 million on the lower side for the $20 million round.
What is the minimum or maximum range of your target in Ebitda?
Minimum is at least $1 million. And maximum, there's no limit to it, but at the same time, imagine if you go after a $5 or a $10 million EBITDA company, the multiples will be a little bit higher. So we don't mind going after them if we have the ways and means to, close the deal. So initially, I think we'll be focusing on $1-2 million type of EBITDA company, somewhere in that range. But very soon, I think we'll go after like very strong, high EBITDA companies, maybe $3-4-5 million in EBITDA.
I think that's about the questions we have here so far. And the questions I had for you. Anything else that Craig or yourself would like to add? And I will mention what I always do, that this is being recorded.
Sure.
Mainly for those who couldn't attend today and registered, that will get the link later on, but also for you, if you would want to look at it again. And I need to remember I have 2 people that I need to connect you to afterwards, that I think, now that I hear more about some of the projects, I think definitely would be relevant.
Sure.
Yeah. Actually, one of our families that got us into blockchain, we came out of Israel, so we were always tech oriented with our conferences and family office discussions. So in 2018, we basically took our tech dedicated event and did it basically just on the world of blockchain, and we've done it around the world. So he's the person that actually got us to do that. One of the people I've.
Please,
so
yeah.
Before I let you add a couple of words, a question here: how do we get access to the friends and family round?
Sure.
I will add to what I just said that we will also send the contact info, so you guys alongside with the recording link, so you guys can get in touch directly.
That's great. Danny,
that's
can
a
I just talk? Danny, can I just talk a little bit more about that round we're doing right now?
Please.
It is a convertible note with a 10% coupon. We've structured it such to make it really, really attractive right now. It's got a conversion price of 50 cents per share before the end of the year, and $2 per share in throughout 2022. If you use a very conservative expectation of going out Reg A at $4 to $5 a share, we think it'll be much higher. I mean, the upside is overwhelming. There are limitations on how many shares an investor will be able to liquidate at the time of the Reg A Plus offering, but we see everybody being made whole on their initial investment, plus some pre-tax profit in a very, very short period of time. And then they'll still have a meaningful investment in the company that will give them a lot more upside as we continue to acquire different companies and grow.
And that's the friends and family, $2 to $3 million you're talking about.
Yes,
Yep.
exactly.
Yep.
It's very straightforward. Srikanth and I looked at this, and we did not want to start a fund because we did not want to, make money off of other people's management fees or carried interest. We wanted to be aligned with our investors, and this way we're only successful if our investors are successful. And I think it's a great opportunity, especially at those 2 price points that I mentioned. And then the larger rounds, we are going to engage an investment banker. We haven't chosen which one yet. We have a couple at the altar. We have to make that decision, but right now we're focused on the initial raise so that we can get these 2 deals done.
And then simultaneously, the $20 million Reg D round is also going to be active next week, starting next week. If anybody is interested in participating, that they could reach out to us. That would be the bigger round at probably $4 or $5 a share. But even for the IPO, if we are going at like $10, $15 a share on the lower side, given the size and the type of the deals we have, that's going to be 2x, 3x in probably less than 18 months, right?
Sounds exciting. Anything else you'd like to add?
No, thank you so much.
Yes.
Really appreciate it.
Thank you, everybody.
I think this is really great. It's great connecting with you, Danny, and hopefully very soon we will have a Palla family office and Connor's family office joining your conferences very soon.
And joining our events in general. Just another question that came up quickly. What exits today from credit card companies or other money transmitter companies that could compete with this service? Or is the market so large out of the gates that all are on a level playing field?
So is this regarding the smart ATM company?
I am assuming it wasn't mentioned.
So there is
yes, they confirm that, yes.
So there is no competition right now because the credit card companies are going after credit card people who wants a credit card with the 10-15% interest rate. That's not the business we are going after, right? This is on the reverse side of it. So this is like focusing on the unhappily banked or unbanked users right now who are on the cash economy side, paying a lot of fees using the bank services or alternative financial services. That snapshot I showed you guys, that's the market we are going after. And we are providing this service by giving them technology and helping them do what they want to do in a quick, efficient, secure way, paying less fees. And everything is handy for them on their smartphone. All we have to do is, make sure the network is so large and so accessible that they could go to any ATM or they could go to one of our ATMs and deposit the money and off they go. They don't need an ATM or they don't need a bank to be able to do these kind of basic transactions anybody would do. So, there's no competition there. There would be soon once we start going, scaling it, but we would have a 2 to 3 years of, we are ahead of the curve, right? So anybody who would like to mimic us or come in competition to us, they would have to build all these products and services, which will take time.
Thank you. So I'd like to thank you both for being with us today. Again, everybody will send you the link to the recording plus the contact information. And I'm looking forward to seeing you at our in-person events. next
Thank
year.
you, Dan.
Thank you, Danny.
And yeah, so unless I'll have surprises coming in from my PA, this is the last session of 2021. So thank you very much for being with us today. And hopefully we'll see you, grow. And we're very excited with what you guys do. It's not an average VC kind of a deal. Definitely we see your expertise and experience and confidence and the ability to find interesting deals out there.
Yep.
Thank you so much.
Thanks,
and
Danny.
We'll see you soon. Stay
Thank you,
safe.
everybody. Happy holidays.
Happy holidays, guys. Thank
Happy
you so much.
holidays. Thank
care.
you. Bye-bye.
Bye.